Hello, welcome everybody. Yeah, Photolist report. Listen, real quick, I haven't done one of these in a long time. We've been busy in our not only trading our asset management, J-Person asset management actively. Also, we have a conduct a live trading room, so we're a little bit busy than doing the regular YouTube and doing the internet marketing thing. And as many of you are aware, I'm not an internet marketer. I do love seeing some of these emails from people that I've come across names at trade shows that couldn't trade their way out of a wet paper bag that proclaimed to be gurus. So there's a lot of bullshit out there on the internet. You definitely need to be careful. And for new traders out there that don't know who to follow, just Google people. When you see an expert who's now at a different trading company, go to their LinkedIn page, look at their history. If they've had like an Alpha Shark this and this and this and all these other names, and they've just been experts and gurus, and they keep changing their company names, that should be a dead giveaway. I'm just saying, be careful out there. What we do is we created this automatic program called the Algo Extreme. And what I wanted to point out to you is the Algo Extreme, it gives users the ability to optimize and to change with market fluctuations. Now, I'm going to share a model that we give out here when we've held two classes. One was a summer school class and one was in January where we called it the Razor Focus class. And so I'm just going to provide you with, again, I am not selling this strategy. It's not for sale. And the reason it's not for sale because it's not mine to sell. I created it for students. Students paid for this. It is theirs. I'm just here to share with you the results and what it does. This is the original one that we built and provided that class called the Razor Focus class in mid-January of this year. Not knowing COVID-19 was going to break out, not knowing any of that stuff. We'd have an end-of-day long only. We have a long only swing 60-minute model, a short only for times that we knew, foreseeing that there could be a period of time where if we enter a recession, we would want to only take short signals. And then we have our base model. This is called the Razor. This is the main model right here. This is the long and the short. It takes longs, it takes shorts. And I will tell you that, again, as you can see, these are actual trades. Every time there's a red line, it's a loser. When there's a blue line, there's a winner. And again, I think one thing that people would not really comprehend, I think new traders will struggle with this based on what they see in the emails and these option experts and everyone has great trades. You know, the thing that I see, and I'm just being the devil's advocate here, everyone can have great trades, but it's the consistency. And if you cherry pick and only show only the winners, yeah, they're going to look fantastic. If I deleted all the losers here, this thing would look great. But that's not what we do. We're very transparent, and I like to tell people the truth. And the truth is trading is a little hard work. In this environment, we've never traded in this environment. If someone says they have all the answers, how could anyone have the answers when we've never traded in an election year like this in a COVID-19 global pandemic environment? So anyone that says, oh, I know what I'm doing, listen, we have ideas of what we're doing. We have ideas of how to take trades, but we've never traded in this type of the pace of change of the markets, the velocity as we call it, nor have we traded in the kind of environment where you're seeing markets move 5-10% overnight on individual stocks. And I would reference a trade that we were in on AEP. We were long AEP. We got out of it at around 93 and change earlier this week. The next day it was on some guru TV show, and it's down 5% since then. I mean, that's a utility company, friends, down 5%. And by the way, that was 14 trading hours. So if I'm giving you bad news, I'm not giving you bad news. I'm giving you cautionary news. If you live by the sword, you die for the sword. If you swing for the fences, just be careful. You're not going to be able to take every single trade, and you're going to have losers. So let's take a look. Extremely proud of how this market is traded. So let's take a look. We just hit another, and the green dots are equity new highs. And through the months, you've seen this. I've shared the results of this algo. So I'm just being transparent. How has it done since all of these summer months that we've gone by? How has it fared? Well, it gets long and then market opens lower, it gets out. It gets short, it has shorts, and it gets out in the open. So this particular week, it had a slight drawdown. But what's nice about this model is every time it has a new peak equity and it has a drawdown, what's the rate of recovery? It's very quick. It's amazing, right? So we had a nice, a long in the market. It didn't go anywhere. We gapped lower, thought it was a disaster. And literally almost yesterday, we made up all for that loss the other day. It is long the market. It went long an hour ago, by the way. It has a profit target and a trailing stop, and we'll see where this trade takes us for the rest of the day. The moral of the story, it's at a new equity high, and this is the razor focus model long and short motor. I don't just get on the horn and tell you about all our winners. As I'm pointing out to you, this has had a few losers. There was a little drawdown, had a winner here, gave up a lot of here are the blue lines, the profit target. What's been happening is the market gets close to that profit target, and the velocity of a 1 hour bar, look how this market's been moving the point spread. So one of the things that you need to understand as a trader is a 1% in the move in the market when we're at 350 is a hell of a lot different than a 1% move when you're at 320 or a 1% move when you're at 250 in the spot. So again, percentage changes and the intraday volatility. I'm not even talking about the overnight from where the market from close to close. Intraday volatility, single action bars in the SPY has been unreal. It's been unreal. But it's been good for us. And as traders, we kind of need volatility if you have the right strategy and the right keyword here, mind frame. If you have the mind frame that you're expecting to have home runs every trade, I don't want to call you a complete buffoon, but you need to do a little bit more education because you're not going to swing for the fences and make millions of dollars on every single trade. And no guru that's out there proclaiming that he made $1 million in COVID-19 is going to promise to guarantee you he can make $1 million this week. Again, I think we can all prepare for how to trade, but we need to be at least reduce our expectations of the outcome of each trade. In each trade, take each one independent of what the last performance did because they're not all the same. Look, this short had the different results of that short. The way the market traded down here versus the way the market traded down here, look, you can clearly see there was more intraday volatile swings and the market had pops to the upside. This had less volatile intraday swings and just traded concurrently lower. So I'm just trying to explain to you the reality of the market conditions, not my strategy, not my system, but yet of the market condition itself. I hope you find that helpful and understand and at least an honest approach of what's out there in the world, the internet world. A couple things that we've done this week in our live trading room. Yesterday, we bought a TBT. We thought that interest rates, we had a buy signal yesterday. Longer term work looks very supportive for yields actually to go up. So we bought a bull call spread for January expiration. We're in the 17-19 bull call spread. On calls, longer term, I'm not talking about option expiration, weekly option trades. Longer term, calls looks dynamic in the next few months. So what we did, as you can clearly see up here, what I consider is a reverse diagonal calendar. We sold the Jan 15th. You can read it yourself, and there it is. If you understand options, this is the kind of work that we do. We did have that trade in AEP, and I'd like to share that with you if I may. Let's take a look at AEP. Oh, here's another trade. What we did yesterday was look at the, we put this up yesterday, a live cattle spread, buying the February, selling the June. Now, this is a bull spread for next year, but we did it yesterday and advised people to be a buyer. And you can look to be a buyer, and your stop loss would be that red line, and the intended profit target is this red line. So that's what we were looking at, getting long the spread here and looking for the profit target up there. Now, this is, if you weren't interested in trading commodities or stocks or options, a spread in commodities, an intramarket spread like cattle, I mean, this is the kind of work that we've created in our room. This is obviously, if you're in a bull spread, you want the spread to do what's called widen or become more positive. And over the last 2 days, this spread's about $880 margin, and it's doubled in value from trading at around 140. As you can see, it was almost at 3 today. 280 was a print. So what does a 140-point move in a cattle spread represent to you? It represents $560. If the margin's 880 and you're up 560 overnight, I mean, this is crazy, the type of movement. So we don't seem to be at the right trade every single time, but we're a lot of times in the right price and the right product at the right time. Is there a coincidence that TBT went up with cattle? There's no correlation. We were just going through looking at a lot of different markets and using our indicators. What indicators am I using? Everything you see on this screen here is the person's PPS, the PMC. I use our Algo Optimizer. This is Thinkorswim, as you see we use in our live trade room. And these are kind of the things that we're looking at here, from SPY to Qs to Teva Pharmaceuticals to, again, a trade long TBT call spreads, TJ Maxx, Morgan Stanley, Apple for earnings tonight, gold miners, GDXJ. We're long from 41.46, and we have an in-the-money collar strategy on that we're going to buy back the short side of the call. We're short the upside calls. The stock's down. We have a $10 profit in the underlying instrument here, a little bit more than a $10 move to the upside that we're long, and we're just protecting that profit in that trade against you with collar strategies. What we're going to do is keep the put on. We're going to buy back the short side of the call. This is the type of work that not only do, we teach, we trade, and we demonstrate live in front of people every single day. So if you're looking for more free information on the internet, knock yourself out. If you're looking for true education, I would tell you to come and put up with my personality for a little bit and my bluntness and frankness, and come join our trading community and see what we're all about. Moral of the story is, we don't just have me talking and doing pre-market and texting and stuff like that about what we're doing. We also, as you can see here, Amazon for a trade today. Apple, I don't think Apple's earnings, they're only looking for an implied move of $3.50 based on Friday's settlement. So that's 118 down to 112. I think Apple's going to be more subjected to price swings based on an election and the taxation. If it changes under a new administration, it would be more sensitive to their stock and their growth rate, maybe based on that relative to the earnings tonight as far as a market reaction is concerned. Secondly, on Apple, by the way, I hear a lot of chatter about people saying we want to see guidance. No real CEO in this environment, unless he has direct government orders that are guaranteed for the next 6 months, can possibly give guidance on A, who's going to win the election, B, how that taxation code change might take place, C, what the hell COVID-19 numbers are going to do. And I don't think that if anyone in the media community or media personality pundits say we want to see what guidance is it just, to me, it's just a crock of shit, okay? And that's how it just logically makes sense. You might look at bottom line numbers and beat, and then have positive follow through like eBay did today. But here's an interesting concept on Amazon, for example. In Amazon, if I may be so bold as to switch, because we have two live trading rooms on at the same time. We have the algo room, and then we have our main trading room. And in the algo room, it shows every trade. This is a 5-minute model that we have on the ES. It went long, it took a profit. This is the SPY model. It went long, it's still long. This is SPXL, it's long. This is the VIX. Behind the VIX is our model that we use for trading indications. It's the VXX. It went short today. And all of the trades that are posted not only on the charts, they're up here in case people don't see them in the trade manager. These pop in live as they occur. You can see when the trade hit, what the strategy price is, and you can look at the P&L, what the performance of the trade is. And all of that is live every single day in our live trading room. So you want to talk about putting your money where your mouth is. That's what Person's Planet does. So if you're looking for more free stuff on the internet, stop looking on the internet. Come join our trading room. I mean that. And you might get some, not just great education, B, you'll get some factual information, and you'll be able to look at some strong performance proven from the past. And again, past performance is not indicative of future results, but strategies that have proven themselves this year in real time, in real money. And that I wanted to point out to you guys. So here we have a lot of comments. As some of you don't know this, but I had a shoulder surgery a week ago Thursday. So I've been a little under the weather. And yes, I'm doing much better. I feel much better today. It's Thursday. And a torn rotator cuff. So if anyone's had a torn rotator cuff, you know they're painful. And it's got a long recovery. But I can still point and click a mouse with a little top thing on my lap. And I can still do market analysis based on the codes and the strategies that we've built, which is on the foundation of my indicators that I've been sharing for decades. With that said, we have really powerful indicators coming, really powerful companies coming out with earnings tonight. And one of the strategies that we looked at was a fly, call, fly, put spread for Amazon for the OCT30. Interesting concept here, by the way. And I'm going to go back to, here's Amazon right down here that we have on our program. If you can read this for Amazon, I even pointed this out to guys. You can, if you're bearish, Amazon's a little trickier to me than Apple. And also I would play the upside at the same time. And this was the strategy that we put out. So for bottom line, by being in a bear fly, bull fly spread for $350, if we just run up to the outside of the expectations, which Amazon only had a $125 earning expectation. And here's the point that I wanted to bring to your attention, which is the most interesting point of all. And for that, I got to bring in my TradeStation radar screen. All right, so let me introduce this to you real quick, and then we'll wrap this up. Amazon, by the way, has a 10-day average true range of about $109. Earlier this morning, we were only at a $40 move. Now we're at a $90 move. So Amazon this morning has already kind of fulfilled its destiny, so to speak, or gotten about 90% of its 10-day ATR. So the funny thing is the market's pricing in a $125 move, and its 10-day ATR anyways $109. So the fly that we were recommending, that you can go back and review the video and read, was within the 10-day average true range movement anyway on Amazon. So again, not a big deal for this earnings. I think earnings expectations have been muted, and yet there's good ways that we can find strategies with low risk, higher rates of return. Thanks for listening. Good luck. And we've got an amazing, since this is Thursday. Now, for my premium subscribers, what we will be doing is we will be going through tomorrow before the close, warning you guys of what stocks will be presenting brand new monthly buy signals. That's right. We look from, if you look left and then go right, something I think a lot of these so-called experts and technicians don't do. They look at daily charts and 200-day moving averages. Listen, man, institutional traders are a little bit longer term than swing trades, and we look at and we pay close attention to monthly long-term trends. And so a short-term trend that pulls back might look to a short-term trader bearish, but to a longer-term trader, that's the pullback they want to enter in. And we want to take a look at some of these names as they start to generate new, fresh, monthly buy signals. So that's one of the exciting things that we're going to do in the live trading room tomorrow. Thanks for listening, and good luck on earnings for you guys. I know it's been a long time since I've done a video update, but I think now you've gotten an update as to the reasons why. Trading real money, managing a fund, running a trading room, an advisory service, and shoulder surgery. Take care, everyone.